start, obviously everyone is aware of Mastercard, but I think it would be good for our audience just to get an overview of some of the services you provide on a global scale, as well as some of the digital asset initiatives that you're working on.
Absolutely. And as you say, whilst I know most of what Mastercard does, a lot of people will think of their card in their pocket when they think of Mastercard, but I do think we're a little bit more than that. So the core card network is really about creating a trust environment where people can do the business that they want to undertake as seamlessly as possible. So we operate in 210 countries. We process payments in 150 currencies. There are more than 100 million locations where Mastercard's brand is accepted as a means of transaction execution. So providing that global scale on the card network is a really significant part of what we do. But many people may not be aware as well that Mastercard also underpins a lot of critical national infrastructure that underpins real-time payments across the globe. So we provide infrastructure or are involved in providing infrastructure in 13 markets that underpins the day-to-day interbank payments that are executed from person to person or business to business, irrespective of the card networks as well. And then on a cross-border basis specifically, we have products and services that enable payouts to, funnily enough, over 10 billion endpoints where you can cash out from a Mastercard product or service. So it really is a global scale. And what we want the Mastercard brand to do is bring trust to that environment. So wherever it is that you're using a Mastercard product, you know that you can trust what's happening, even if you don't know the person on the other side of the transaction. But ultimately, we want to respond to what our end customers want to do. We want to promote that consumer choice, but we want that consumer choice to be implemented in a safe and secure way. We want the trust of Mastercard to be brought to where consumers want to execute their payments. And so a lot of what we do actually doesn't involve blockchain, funnily enough. I'll get onto the things that do in a moment, but just to explain, you can issue a card today off a digital wallet that is hosted on a blockchain via a digital asset service provider. That enables the end user that is holding their balance in digital assets, various crypto if they want to use that spending power at any of those 100 million acceptance locations. Mastercard does not need to be involved in blockchain in order to make that happen. We can facilitate that consumer choice, bringing the scale and the security of the Mastercard network to the customers who have just made that decision to invest or purchase a digital asset on a blockchain. Maybe they use their Mastercard at an exchange to make that purchase, and they are now holding it and want to release the spending power. That's an interesting component.
And next, I'd like to talk a little bit about the work we did on the Institutional Interoperability Report that was produced by Axelar and Metrika, who is here with us as well today. And Mastercard presented an expert opinion, right, a piece as part of that paper. So I'm curious from your perspective, how important is interoperability to just make enterprise blockchain happen and make it usable?
It's vital, right? We are going to live in a multi-chain world, right? We are going to live in a world where different chains are optimized for different business models and use cases, and potentially even, to be frank, different jurisdictions. But maybe that's not so relevant. And so I guess I see, firstly, the technological interoperability. So understanding how information on one chain can be exchanged with information on another chain to ensure that there is either synchronicity where that synchronicity is necessary, or information can be transmitted. But there is also a requirement for liquidity to be available in different locations. I think we want to avoid a circumstance where there is a requirement for individuals or institutions to have to place liquidity in a huge variety of different locations. That I think would be a suboptimal arrangement. And then lastly, I just want to also make a point about things that are not specifically to do with either technology or liquidity, but are equally important around setting standards, setting rules that ultimately could be implemented via a smart contract, but start from a perspective of a common understanding of the business opportunity, a common understanding of the expectations that we place on each other. And MasterCard has a huge role to play there, I see, right? It's an experience that we have to build networks of participants who have often competing objectives, but to bring together people who actually understand that everybody will be better off if there is a common mechanism through which we engage with each other. And that will require tech components to support that interoperability, but it also requires effective standards and rules of the road that a network like MasterCard can bring. It's almost abstracting from the technology, understanding what services you want to offer, and which parties need to be involved in the provision of those services, what partners you need to engage with, what roles and responsibilities do you have, and do your counterparts have, and then make decisions as to whether or not a technology choice is suitable for that environment. I guess I'm like you, optimistic that we will get to a point where we are able to make those technology choices free of preconceived ideas as to how these things operate. I also, quite frankly, I enjoy the conversations that I have with my customers and potential customers where I don't even need to mention blockchain, right? I want to just provide a set of services that are valuable to customers. When I get today or yesterday when I arrived in Zurich, I went to the taxi, I tapped my MasterCard at the end of the journey. At no point did we have to discuss the technology that was used within the chip to send the message, and ultimately what settlement would occur between my sterling-denominated card and the Swiss franc-denominated merchant that I was transacting with. That's how payment should work, right? It shouldn't be a technology discussion, but the technology discussion is very important for the likes of us to understand how best we make those services available to customers.
Yeah, the technology is there, but no one should have to think about it, right? And I think that's a great segue to the discussion of user experience in blockchains as well. And in the native Web3 space, we talk a lot about chain abstraction, account abstraction. How can we enable users to just interact with the technology without having to think, about passwords, about custody, about any of that, right? So
exactly, there are some users who are very familiar with blockchain, who've made active choices as to where they place their funds. We want to support that, right? And we want to enable that. But there are those also who, perhaps, let's say, merchants who don't necessarily want to engage directly with blockchains or digital assets. And it works in both directions, right? I think what we saw was that there are a huge amount of things that we can do with the card networks, but they have a way of working, an established model, and we saw the opportunity that could be brought forward if we could actually apply some of the principles of that network directly to blockchain-based transactions. So take an example, identity management, for example. Your MasterCard is your credential. You take it into a retailer, you type in the card number online. That shows that you have been verified by a trusted party and you can conduct the transactions. That principle can be applied in any environment and can certainly be applied on blockchains. We recently have launched a product that we call Crypto Credential, which does a very similar thing. So it enables a credential to be issued by a party that is involved in a MasterCard network, so that the participants in a transaction can use that credential and have confidence that the party on the other side, even if they don't have all of the information about that party, they can be confident that it is a party that has also been onboarded onto the network, and the service providers can exchange information to be in compliance with regulatory requirements. So I guess that's an example, I guess, of one area where we think that we can bring some of the experience that we have in building networks, bringing trust onto blockchain-based payments. We've done a lot of experimentation on public blockchains, though. So to take an example, we used the principles of our crypto credential product. We operated that in an experiment with the Reserve Bank of Australia last year, who were looking to experiment with the issuance of digital currency themselves, the Aussie dollar. And what we showed was that kind of using the security of a MasterCard set of tools, that you could enable a privately issued CBDC to be interoperable with assets that were hosted on a public blockchain, so that end users that were holding the assets on public blockchain and wanted to transact using them could use a currency that was issued by a central bank, that central banks perhaps not willing to put currencies directly on public blockchains. We could ensure that interoperability between the currency that is still hosted on a private infrastructure with assets that are hosted on public blockchains.
That's an extremely valid point. So even if some institutions never want to touch public blockchains, it is a reality that a lot of the liquidity, a lot of the users will have their value hosted on such public blockchains, right? And we want to make it easily accessible, right? People to move in and out, just interoperability across the board, right?
I think that's what we're seeing today. Of course, when it comes to some of the more regulated markets, there are regulators who are perhaps not yet comfortable with regulated assets being hosted on public blockchains, but the range of assets that we do see on public blockchains is there for all to see, right? It's not something that's going away. The amount of development work that's going into public blockchains, the amount of investment and intellectual capital that's going into public blockchains, we need to ensure that the solutions that we are providing are interoperable with those ecosystems.
Yep, and we have seen even BlackRock tokenizing some assets on public blockchains. I'm curious from your perspective, right? Not just from the Mastercard perspective, but also your partners, your clients, and your wider network. Do you see people mostly being interested on public or private blockchains?
So I think it's a combination of both. We do work very closely with financial institutions, with banks, who are probably one of the most regulated sectors. And it is totally understandable that the regulators impose quite high bars on those financial institutions in what infrastructures they can use to provide services to their customers. Now, I think what that has led to is, in a lot of the regulated markets, a preference for, and certainly an initial deployment of private blockchain infrastructures rather than immediate deployment of public permissionless blockchains. To be frank, even MasterCard, right? When it comes to our multi-token network that you referred to, that as of today is not directly deployed on a public blockchain infrastructure. We intend for it to be interoperable with public blockchains, but for I guess both maturity reasons and the partners that we work with, there is more comfort in working with those private systems. But what I do see is an active discussion. I do see regulators who are at least willing to engage in the substance of the discussion now, whereas perhaps previously there was more of a genuine aversion to even talking about public blockchains. So it's definitely an area that we need to work with.
Yeah, that's definitely the word, aversion, which is what we've seen for a long time, right? Before co-founding Axelar, I was part of the founding team of Algorand, and we're doing a lot of work, around CBDCs. Of course, those things moved way slower than we're hoping for at the time, but there was a big aversion, as you said, to engaging with public blockchains, which it feels like finally something has shifted, right? And people are open to at least considering the technology.
Exactly, and I think, let's be understanding of what the regulators are asking for. Payments is an important part of an economy. Banking is an important part of an economy, and payments as a part of that, financial system. You need it firstly, to be resilient. You need to have confidence in the infrastructure that is being executed. You also need to have confidence that the parties with who you are transacting with are, you can undertake effective due diligence on those parties. You can undertake AML checks where those checks are necessary. And so, but I think it's a much more productive conversation to be discussing how do you achieve those objectives in the context of technology choices rather than a binary yes or no discussion as to private versus public. Because actually when you get down to it, there are many ways in which you can provide controls on any system, and there are ways in which any system can be subject to destabilizing effects if not run effectively.
At least from a technical perspective, I do feel like we're at the point where blockchain technology itself scales enough, it's usable enough. We have to figure out some open questions around user experience, but on that part, it's more about executing, right? From a theoretical standpoint, we're at a very good place, but it is an open question, what people, on your side of the table, like who are parts of big institution, how do they feel about it? Do they feel like using this technology is more of a question around, social coordination, standardization, or do they feel like the technology itself has to improve still before it's actually usable at global scale?
So I think it's a bit of both. We have a full expectation that blockchain technology will be here to stay, but I think there is a long way to go before we see kind of sufficient economies of scale for a huge amount of payments to be executed on blockchains. And I think it's only really when we see that you will start to have the level of kind of commitment from all of the kind of regulated financial institutions towards that. So I think it's difficult to predict how that will go. But ultimately, the interoperability between chains is just, as I said before, a necessary part of the puzzle.
But in the interoperability paper, we talked about some key themes that are going to be required before interoperability technology and blockchains get adopted, right? We talked about flexibility, just being able to work across multiple chains, public and private. Privacy, of course, is very important. Transparency, being able to monitor what is happening throughout the life cycle of a transaction, right? And I'm not sure there is consensus on those properties, there is high-level consensus, but yeah, I'm curious, to really get adoption of the technology, right, at global scale, are there any missing properties, or what are the key properties maybe that we need to achieve just global adoption of the technology?
So I would maybe draw out a couple of distinctions, because I think the question implies that there is something inherent in the technology that needs to change, and I think that is true insofar as you need to have the regulated financial institutions, the regulated financial ecosystem more comfortable in deploying money on chain. There is many discussions, I've been involved myself in many discussions as to whether that money will be central banks, digital currencies, whether that will be regulated stable coins, whether that will be tokenized commercial bank money. Personally, I think that the sheer scale of commercial banking means that it has to be commercial bank money at some level. So we have to enable commercial banks to have money, for customers of commercial banks to have money in their bank accounts, lines of available credit that are interoperable with what is happening on chain. That is a kind of necessary condition in order to make these ecosystems scale. Now, it's a little bit of a chicken and egg scenario, right? What are the preconditions for that to occur? And I think part of that it absolutely has to be the regulatory environment, right? You cannot expect regulated financial institutions to move shop onto blockchains without a degree of confidence that the regulators are going to look at that favorably. And so I think it's really kind of getting into the details as to what will be necessary. Now, in that context, I'm not sure that interoperability is kind of top of the list when it comes to those foundational questions. I think it is much more about privacy. It is much more about the ability. It's a weird trade-off, right? Transparency and privacy. You want to be able to maintain privacy, but there is benefits in transparency in understanding what's happening on chain. But I think it's more around how do you ensure that you can know who you are transacting with. You can perform the relevant AML compliance checks to ensure that it's more about the counterparties who you're transacting with on chain, just as much as it is about the technology.
Yeah, and it's about solving those problems like within the boundaries of any single blockchain, and then the next step is to think about interoperability. But we have not even solved a lot of those open questions for a single blockchain, right? And
exactly. Now there are, of course, there are examples of money on chain, right? I'm not going to say there are not examples of money on chain, but I think for the scale that I think you're talking about, it needs to be those kind of regulated financial institutions, because even though that kind of money that is on chain today, the regulatory environment is coming, right? It's particularly in the more advanced economies, it's coming. So we need to anticipate that and ensure that we can create that environment whereby that kind of safety, that security and that trust is just built in from the start in terms of how we transact with each other.
Yeah, and at the end of the day, though, we do need interoperability, right? Otherwise, we're not going to be able to work across all these different networks. But yeah, I do agree with you. We have to solve this problem first for individual chains, and then solve them, cross-chain when the time comes to go cross-chain. But that's exactly why we built Axelar as a blockchain itself. So while we solve these problems within the boundaries of any single chain, we can easily expand those properties to other chains, given Axelar uses the same technology as individual blockchains. So at least that's my hope. And, a lot of open questions, but, that's why we're all here.
I was going to say, exactly, right? That's why we're here. We've got a great session coming up this afternoon, which I'm very much looking forward to. Looking forward to connecting with new people, hearing different ideas, because actually it's through that common exploration that we'll get to solve these problems.